The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
What's happening, Octo family? We're going to take a look at a SPAC, a previous SPAC that is not SPAC no more. It's fully on its own, a full-grown chicken. No one's talking about it. I think people forgot about it. It's actually been going up a little bit, but I still think there's plenty of room to run. This, I think, can fit into the category of like a golden unicorn. It's got value and huge growth all combined. Massive amount of money flowing in. Going to take a look here. IEA Infrastructure, the SPAC that always could. They are ranked number 2 in wind energy, number 5 in mining, number 6 in power, number 12 in solar, number 16 in mass rail and transit, number 17 in highways, 38 transportation, 56 of the top 400 companies in the whole main sector here of contractors alone. So, as you guessed it right away, number 2 in wind energy. These guys have all sorts of energy plays. They got the wind, they got the solar, but then you got mining, they do roads. They all big boy moving stuff, planning stuff, energy stuff. Awesome. In the past 3 months, the stock has gone from $4 to $17.50. Hold on, we'll explain it later. Stock Twitch watchers have more than doubled in the past month or so. Sentiment is more positive than any other stock I have seen. This is from one of our long-term watchers, subscribers. He sent me this right here. Revenues are $1.88 billion and growing at 23%. The company has over 130 million EBITDA, but market cap is just 400 million. This is severely underpriced according to me and a lot of others. They're involved in civil construction, wind, solar, one of the biggest firms in the world. All of their businesses benefited from the Biden presidency in the coming in infrastructure spending. Again, I've talked about this before. I think every president since I've been alive has talked about huge infrastructure spending, and I've never seen it. So we will see. We will see what happens. This stock is just largely unknown. A little attention could send this thing flying faster. I thought it may be useful for your viewers to know, so thank you. This is former SPAC, so there are IEAWW, which are the warrants, and a 52-week low high of 1 cent to $3.35. I think that 1 cent could have been just a weird flick in the thing. I don't think that actually is true. Regardless, why are we talking about a SPAC that's already $17? Because it's only got a $22 million float, and it's severely underpriced. Severely underpriced. Of course, we wish we would have gotten it, around $5, but it's at 17 at first. I was like, and then I saw the float. Oh, okay, we only got 22.8 million shares, and then you see the warrants. Check out the warrants, $3.18. So right away you're like, whoa, that's a smoking deal. Here's the catch on the warrants. They're worth like 0.5 of common. So you need 2 of these warrants to buy, let's call it, get a common. And remember, there's still $11.50 strike price too. So $11.50 plus 318 plus 318 is where you're at. Regardless, these things could still multiply. I don't see why they couldn't. Definitely keep that in mind when you're looking at your calculations for this. 0.5 warrants, all right? What you're looking at right now is a calculation, at least when I did this, I think Thursday or Wednesday or I don't know, a couple days ago. The warrants are technically overpriced right now, but if you follow these up and the common price keeps going up, these can still multiply super fast. So technically they're not a good buy right now, but let's take a look. One other thing before I forget, they expire. This is kind of shaky here. The warrants actually expire May 20th of this coming year. So 5/20/21. So usually when we talk about SPACs, we've got like 5 years or 4 years until they expire. So plenty of time. It's only got about 5 months. So keep that in mind. If you don't reach where you're at that point, you could be bag holding and they're worth nothing. The play on this, I think, is to, get a combo of both. But regardless with the warrants, remember you can just trade these like regular stocks. So, if stuff's tanking or whatever, you can just sell them. Boom. Sell them, or I guess you could always just turn them into commons if the math makes sense, right? So again, we talked about renewable energy. They're big on this. That's the first thing they're popping right now. With in-house expertise across all phases of the renewable energy life cycle, we can support our infrastructure project from power generation to delivery. So not only are they going to, it's just the whole mode, right? So they're like, yeah, you need the windmills. You want us to install them. You need a road, because they do roads too, right? So a lot of these windmills and stuff, they put them in places where there's nothing going on, right? Out in the middle of nowhere, because land's cheap, might be windy too. They can take advantage of that. So now they can say, hey, we'll even have the backup battery stuff going on. The power, we'll connect the power. We'll get a train in there. We've got excavators, right? Because they have the environmental stuff, moving dirt, power delivery, the wiring, the heavy civil. It's just the whole package. That's why I like it. So on our Discord, they said this is seriously undervalued. Their revenue is $1.4 billion in 2019, which has been double since 2018. And that was the previous year. It's even more now. It's even more. Said I'm going to look into it more. This is showing here. We've got proof of it. Just look at when you have revenue that looks like this, like a 45-degree angle up, the company's doing pretty darn good. Pretty darn good. On November 2nd, they had an Infrastructure and Energy Alternatives, Inc. enter into a $550 million joint venture with them, with Passion, FH Passion, for the West Lake Corridor rail expansion into Indiana. What does that mean? They're going to be building railroads in Indiana. And there's a $550 million joint venture. That's why I like companies like this, because they push contracts like that. $550 million contract in one sales meeting. Come on. Who else can do stuff like that? Said, man, if this thing's runs to $23.77, so if the commons run to $23.77, they're only at 17 and change right now, you'll 2x your money on the warrants. At least when I calculated this out earlier. It said IEA has good fundamentals and they're in a hyped sector. I don't see why they're not going to run unless there's a pullback for the whole EV/energy sector. I don't think there's going to be a big pullback for EV and energy for a long time until something comes in to replace it. Because right now, it's still hardly even anything. It's hardly even out. Hardly any electronic vehicles out there. But when he's talking about the pullback, yeah, there could be a full market correction pullback. Yes, this will tank with that. Okay, if and when that does happen, of course this will go down with it. But I don't think EV is going to lose its hype anytime soon. So I'm cool with this. October 7th, they had Infrastructure and Energy Alternatives, Inc. secure $17 million construction project with California Department of Transportation. Okay, so dude, having California transportation in your back pocket, they're already doing stuff for them. September 1st, Infrastructure and Energy Alternatives, Inc. appointed Maroma da Silva the Vice President of Diversity and Inclusion. They're hyping on it. That's like mandatory stuff right now, right? Even the NASDAQ is talking about you have to have it. So they're already doing it. September 15th, Infrastructure and Energy Alternatives, Inc. awarded 302 milliwatt EPC wind contract in Indiana. They got Indiana in their back pocket. They're building them railroads and wind energy projects. Our commitment to next generation energy includes harnessing the potential of biomass material for the production of green power. I've asked you guys about biomass before, and the main answer I got was it is dinosaur poop. Sweet, dude. If we can pull energy for cheap, I don't care if it comes from dinosaur, whatever. Let's take it, right? So they're even doing that. Pretty alpha in this. Look at this. We'll move mountains for your clients, literally. Contact us today to learn how we can leverage our expertise to bring your next generation energy and heavy civil infrastructure projects to life. So again, if you've got, say you've got 100 acres randomly in Alaska or wherever, you start calculating it out and you're like, wait a minute. If I paid these guys to come and pave me a road, put in some windmills, make some bank, these guys will handle it all. I was saying this is like the perfect match for Hennessy 5 SPAC, the new one that's coming out, or all Hennessy's. This just seems like something that this would be like the dream SPAC grab, I think, right now. If Hennessy were to grab another company like this, I think it'd be great. Or I was even thinking NHIC, New Hold Investment. That's got a lot of the old Henny team in there. So I'm calling it like Henny 2.0 I've been talking about. But that one's like an industrial. This would be like a perfect target for them too. But again, this is they've already got the target. This is already done. But I'm just saying, I feel like if a SPAC were to get a company like this right now, it would fly. But because this has already been 2 years since it's been out, I don't think not many people know about it. The CEO holds 1.3 million shares. Can y'all do the math on that real quick? It's $17. That means he believes in it and he's got a lot of money riding in it. You can take a look here. There's all sorts of people. Even the exec VP, general counsel, they've got 891,000 shares. Tons of tread. Like everyone in it looks like they've got it. Just we're not getting the rest of the numbers here, but the treasurer, the VP of COO, VP of HR, they've all got shares. That's good. Finbox here. So they're even showing a prediction of a fair value for this thing. They're saying fair value just based on numbers is $51.80 for a share price. And that's fair. That's not saying like a high price point. They're saying a fair price for this would be $51.80. As you can see now, it's sitting at $17.41. And these don't calculate hype much, right? You can't, there's not big hype cool factor in this calculation. This is just like the numbers. So this is like the value guys. You know, I've always liked investing in just big, heavy industrial stuff, but the problem with a lot of those stocks, they don't do anything. Like railroads and, you know, even the farming stocks. Like farming, there's a lot of farming stuff that does well, but I like this one because you get the full package. You get the roads, the railroads, the ESG, all that. So the upside on that is 197.5% upside on this company if it were to get to the $51.80. It's pretty incredible. And again, that's by Finbox. Got the calculations here if you want to go mimic it yourself. That is huge. Can you imagine what the warrants would do if they were to get even half there by May? What do you think? Calculate this out. Warrants above 1150 at the moment. I don't know how I feel on this 5-month expiry date. Just keep that in mind, guys. You've only got the 5 months. IEA just got added to a clean energy index, which is 3 times this year. I can't find how much money is in this index that is managing it, but it's still a big deal. So what is this? There's basically like an ETF out there that has gone 3x, and it's for energy infrastructure. And these guys are in it, so they're a big part of that. So they're one of the reasons they're moving up. Check this out, December 18th. So this is big news too. Infrastructure and Energy Alternatives Inc. to be added to the CIBC Atlas Clean Energy Index. I believe it's the same one might have been talking about here, but this is big news. And this happened like a week ago. Got the link here if you want to come read more about it. Funds just started getting into this. IEA 24% increase since last quarter. So big funds just started getting into this. 24% increase in funds getting this just the last quarter alone. Follow the big boys. They're ranked 10 in the group industry by IBD. Group relative strength is A+. Earnings surprise last quarter was 100%. EPS is not very high and can be improved, but other clean energy stocks like FCEL and Klein have way worse stats, and their market caps are over $1 billion. We're not even close to that. Here we go. Here's rating of A+. Company overview here. We're taking a look at how they're the leading infrastructure construction company with renewable energy and specialty civil engineering experience. So they're showing here in this map, this is denoting headquarters and regional offices. So they've got a place in Nevada, California, Arizona. It just keeps going. Not all over the United States, but Georgia. I mean, they've got like 1, 2, 3, 4, 5, 7, 8 offices. Peak employees. Employees are going up. Dude, they've got over 4,000 employees. Fantastic. Our equipment, they have approximately 193.5 million of equipment. Just book value alone. So they've got tons of cat tractors, looks like. Business segment, 66% of their business is in renewables. So that's like, let's call it the green thing. Wind, solar. They design it, development, construct it, reconstruct it. 34% is specialty civil, heavy civil, high altitude roads and bridge construction. You need a bridge? We got you. You need road? We got it. Specialty paving. high voltage electrical work, rails, trains. Y'all like trains? Environmental, site closure, contract mining, and coal ash management. So you got some possible runoff that could be damaging rivers or lakes, whatever. They can handle that too. End customers, state DOT, major rail, utility companies, energy companies, mining. Dude, strong investment thesis. Check this out. The industry leader in the U.S. wind and solar construction. Growing presence in coal ash remediation, a required step towards decarbonization. So they're even doing that, like recycling the ash stuff and getting rid of it, whatever they got to do. Diversified revenue streams provide stability. That's huge. It's not just ESG. They also do roads. Long-term client relationships, sound financial performance, and improved liquidity, growth drivers across end markets. So this was their diversification in 2018. It was 95% renewables, 5% heavy civil. But after 2018, they're doing the 66 renewables, heavy civil 19%, 10% rail, and 5% environmental. So that whole environmental thing, I'm sure they're going to keep growing. Year-to-date financials. I mean, come on, dude. Look at this. Revenue in 2019, $940 million. Revenue year-to-date this year alone is $1.361 billion. And this was just including third quarter. This is not including the fourth quarter. Do you realize how insane that is for growth? And it's definitely not priced in, I don't think. Renewable energy, they're just showing the potential. I mean, estimated $28.4 billion in utility scale and wind and solar construction between 2020 and 2023. As we all know, it's just going to keep growing. It's showing, Texas is big, just going up the Dakotas, all that. The specialty civil thing, $800 billion in non-residential construction and experience per year. So if they're really going to be fixing bridges and roads in America, which I hope that happens, these guys benefit from that too. $800 billion. Is this the golden, beautiful unicorn that we really want? I think it might be. I think it might. Who does this remind me of? You remember my video? It was a workhorse correlated video on TPI Composite, the workhorse USPS body maker. So the people that make the body for the USPS van for workhorse, it's a composite, is a company called TPI. Well, if you haven't seen that video, watch it. But TPI, they kind of do some of this stuff. They do wind turbine stuff. They make those big blades and stuff, but they're not near as big as these guys, right? Not near as big. Check this out. TPI Composite. When I made that video, it was right here, at the bottom at $32.63. What happened? It started moving. So TPI went from $32.63 all the way up to $55.14. It's actually been up to about like 59, but right now it's called 55. Pretty huge for this one. Now we have something to compare it to. Remember when we talked about the $1.4 billion revenue last year? Well, remember we are actually about 30% above that last year's revenue alone already. Right here, we're just talking about that. So take a look at this. TPI, they've got a 35.7 million shares out there, but a $2 billion market cap. They're sitting at $55. And then here we have the infrastructure energy alternatives, IEA. We're sitting at only a let's call it a 400 million market cap. But they're slated to make like well over 1.5 billion this year. And they've only got 22.8 million shares. Again, we're only sitting at 1741. By the way, there's options, but there's also warrants. Play all three. Another person on our Discord said, hey, this is seriously undervalued. They're 1.4 billion in 2019, which is double from 2018. I'm going to be looking up more of this. So 1.4 times 0.35 year over year increase is roughly 1.9 billion. So to match the market caps with TPI, what price does IEA price need to be at roughly? 80% increase just to run parallel to TPI. Isn't that a trip? So I'm not 100% sure if they if they actually make the windmill thing or the wind, but it would be cool. I'm going to look into that because if we can parallel the two, if we can put them together, like what if TPI makes them for them? Then we can pair them together. So then we'll get the TPI bros, the workhorse bros, all investing in this one too, and it'll be a big old synergy run. Let's get it. We just know they install them and they can take care of it. But I'm going to find out if they buy the physical blades and stuff from TPI. Does anyone know? Put it down in the comments. So result, got $31.2. So a 17.41 increase, which is 79.22%, equals $31.20, which is where I'm calculating it out based on the TPI comparison just to match where they're running. This stock should be $31.20, and it's only sitting at $17.41. Here's the math. I laid it all out for you. So how should we play this? There's, of course, 1,000 ways to play it. Again, you can do the options and go straight crazy. If you want to go crazy, go 100% options. I recommend it. So how should you? Low risk tolerance. Just buy 100% of the commons. This is one that, like, dude, even if you get stuck in it for some reason, it's one of those who cares to me. This is like one you could take and put in your forget me account and just check it in a year or two. The company's 110% solid. They're not like making something weird that they're hoping to get a patent on or they're hoping to get a contract with. They got contracts on everything. They're not making anything weird. They're just like building roads and putting electricity and stuff together. Recycling, come on. Mid-risk, you could do 50% warrants, 50% comments. Yeah, you can play that route too. Just remember, you got to sell or turn these warrants in though before July, before June. High risk, you just go 100% warrants. Combine it with the comments. I think probably a good other mid-tier, you would do like maybe 25% warrants and 75% commons. I think that'd give you a good conservative risk to reward there. I think you'd be doing just fine, even getting that. So take a look at the chart. What's going on with the chart? Looked like a big old cup and handle pattern, but it just blasted through. Here. We had a line at maybe 11 we could draw in, but it has been rallying a little bit. But again, we're still way off, dude. Way off. My calculations were totally conservative, and we're still almost 2xing with my conservative calculations. The other ones are saying like 3x, 4x. Take a look at this. We have these channels here around $12.69 and $10.24. Of course, like anything, it could just dip because it's going to dip. All right, it just can. But just watch these. If it starts coming down, it will probably stop, I'm guessing, around the $12.69. If it blasts through that, it'll probably stop at the $10.24. As long as we don't have a big market correction, I don't see this thing dipping. I see it just more people finding out about it. It's just going to keep ripping. Why not? Why wouldn't it? Don't believe me? I put in the EMAs. Where's it flowing through? I would say it's definitely flowing through the 100-day. 100-day, we're keeping at the base, which is this blue line here. It's staying above it. It's wanting to stay above that 100-day for sure. So what do you think? You got to get into this one? Is this just not your play? It's just not cool enough? That's maybe one thing this doesn't have is too much of a cool factor. It's not an electronic vehicle. I haven't seen anything about charging, but I guarantee they would do it. I should probably find out. Maybe they have a division like, yeah, we just started doing solar power installs. I'm sure they would. I mean, solar charging for them, right? Of course they do solar, but if they can do all this other stuff, they can install some Blink chargers. No doubt in my mind they can. It's a big bad boy company. Y'all got to get in. How are you going to play it? What percentage are you going to do? Let us know down in the comments. If you haven't subscribed, please do it. If you joined our Patreon, please do that too. Hope you all had a Merry Christmas. We'll see you out there.
Did you know that we give away free silver? Simply leave a comment on the video, and as long as you're in the continental United States, you can be automatically entered to win. Please friend us on Twitter and StockTwits.